So we had good news coming out of the GDP data today. It grew 0.1%, which was more in line with consensus. I think the better news was the revision to the January data, which essentially leaves the economy on track to grow by 0.4% in the first quarter. And so that's good news. It means that the economy has turned the corner and is now in recovery. I don't think it means yet that the UK economy has shifted into a higher growth economy. I don't think we'll be looking at 0.4, 0.5 for the rest of the year. Our forecast is that growth rates will be a bit lower, so around 0.2%. They will be driven by the recovery in real incomes, falling energy prices, and also easing in funding conditions. But I think the important thing is that the recovery will be subdued enough as not to endanger the progress made on inflation so far. So from that perspective, it won't worry the BOE, and it still opens the path for rate cuts.
How quickly, once we get those rate cuts, do you think the UK economy will respond to those rate cuts? Policy works with a lag. How long do you think the lag will look like?
I think once we get, our view is that the rate cuts will start in June. We think by then the BOE will have enough information on the table that confirms that inflation is on a durable path to 2%. We actually think they will go at every meeting after that, because essentially the policy stance is very restrictive right now. They're far away from neutral, so they will feel comfortable that they can cut very quickly until they probably reach 4%, which is when the question about what's the terminal rate and the uncertainty about the terminal really starts to kick in. And so we think that from 2025 onwards, the pace of the easing will slow down as they try to really assess what's kind of the terminal rate for the UK economy.